On today's hot sheet, I'm discussing housing market predictions from IvyZelman and Meredith Whitney, plus mortgage applications for the last week of 2023. Today is Wednesday, January the 3rd, 2024. I'm Byron Lazine, and the hot sheet starts now. Welcome back to the hot sheet. Let me know in the live chat which market you are tuning in live from here on the second hot sheet of 2024. And I come bearing gifts. In the second segment, I'll tell you what that big gift is for every real estate agent operating at a high level in 2024. Before we get to that, we have an IvyZelman prediction for this year. Her housing market outlook we should all pay attention to, because in 2006, she was one of the only analysts who called the housing market bubble. There's going to be a lot of people these days that say, I saw it coming. I could see it in 2006. I lived through it. I owned 3 homes at the time, and I lost everything by my mid-20s. I've told that story numerous of times. So I was that Big Short story going through the great financial crisis. And I can tell you that most agents, brokers, real estate analysts did not see it coming. Most were not saying what IvyZelman said at all. So anytime IvyZelman speaks, I listen. She was truly one of the only and one of the first that called the housing bubble of the great financial crisis. Of course, yesterday, I left you with one of my favorite quotes. I'll just read it off here quickly again, just for those that are unfamiliar with IvyZelman, who's a Hall of Fame institutional investor equity analyst who focuses on the housing market. IvyZelman, this is a tweet from Steve Harney, but this is an IvyZelman quote. She doesn't use social. Said, "We would never suggest that a real estate company could be successful without fully understanding local market trends, but ignoring macro trends," basically what we do here on the hot sheet, "or assuming they do not carry the same weight would be an equally erroneous suggestion. In our experience, the most effective industry leaders appreciate the appropriate balance between the two ends of the spectrum." So with that introduction, let's dive into what the famed analyst IvyZelman does say about this year's market. Now, let me just, for some context here on 2006, what was happening. Here's a quote from IvyZelman, who was then an analyst at Credit Suisse, said to Toll Brothers, Robert Toll, the co-founder, and who was then the CEO of luxury home builder Toll Brothers, "I am wondering which Kool-Aid you are drinking because I want some," she said on a conference call in late 2006. This was after Robert Toll was saying that the housing market is going to continue to go up. Trust me, I was talking to dozens and dozens of agents and brokers every single week during that year, and they were all saying the same thing as Robert Toll. It's not going to stop. The market's going to continue to accelerate. In fact, in some markets in 2007, it continued to do that for some time, even after it started to become apparent that things were going to fall apart. They fell apart quickly after that, of course. A few months after Zelman's infamous remark, which most people disagreed with at the time, home prices began to fall in the beginning of what was later known as the U.S. housing market bubble. Zelman left Credit Suisse at that time, or the next summer, and then by October 2007, she co-founded the firm Zelman and Associates, and she is still the CEO of that today. And so let's take a look at what her prediction is for this year. Heading into 2024, Zelman is upbeat about the state of the U.S. real estate market. So there's the first gift for everybody here on the hot sheet today. A little positivity. Zelman upbeat about the U.S. real estate market, more so than in 2023, where she wasn't upbeat at all. In fact, in the beginning of 23, Zelman projected that prices would go down, and she was right in the beginning. But the economy was so strong, the job market was so strong, that by the end of 2023, she had to realize that no, uh, prices aren't going down for the year. And in fact, we know what happened. We set record highs going up 5 or 6% across the country. We're starting to see affordability improve dramatically, says Zelman. That's on those continued mortgage declines. And she does see some more positive movement in that in the future. I think you can expect, in our opinion, to see home prices accelerate, but at a more modest level. Zelman's projections for home price growth is in line with my personal projections of flat to up a couple of percent. She projects home prices will likely rise 1.5% this year and another 2% in 2025. So she has home price acceleration, but not some unhealthy takeoff. She believes that home sales growth of 5% is in store for 2024. That's total transactions. And then another 8% on top of that in 2025. Okay, this is going to enable those slight gains. And she's got the 30-year fixed mortgage rate at 6.4% this year. Before I saw Zelman's, I was right in line. I went over on the 6.375, but I went just over. That over-under on Knowledge Brokers podcast that we set, I thought was right about on the money. That's where she's at, 6.4%. And then she's got 6.1% in 2025. Now, listen, as much as I love IvyZelman, I hope she's wrong on that. I hope we get under 5% for long extended periods during this year. Because if we do get under 6%, I'm sorry, into the fives for long extended periods, that home sales growth is going to accelerate well past 5% and 8% on the next couple of years. Those transactions are going to accelerate. There may be a gift coming here on total transactions here as well, a projection gift. Obviously, what would Zelman, why would she change these projections? Well, it would be a recession, of course, given that it would result in layoffs and inhibit people's ability to buy property. But as of now, an economic downturn is not part of her thesis. Her expectations are based off of assuming that we're in a status quo economy. Haven't heard that one yet, but that's a good way to describe things, a status quo economy, where we're not going to see significant job destruction, and that Jerome Powell acknowledging that he might have possibly pulled off the impossible, that soft landing that the Fed has talked about. And with, again, having jobs still in good demand, demand is still pretty strong for jobs across the country. Now, we know, we talked about yesterday. If you missed yesterday's hot sheet, go back and listen. What's the one thing that kind of brings the 30-year fix down even further, like into the fives or maybe even below 5? Unfortunately, it would be that, huge job loss. So we're not rooting for that. But the Fed's also not rooting for jobs to take off in such a way that it bumps up inflation. So it's that status quo economy that she's talking about. All right. Here's something in the Wall Street Journal that I thought, just to divert, and we'll go back to Zelman here. Wall Street Journal this morning that I thought was interesting based off of yesterday's hot sheet. Job postings on Indeed year-over-year change have completely plummeted. Wall Street Journal makes the case that finding a new job is getting harder. Posts have fallen throughout 2023 and are not going back up so far here to start the year. So we're not going to see this huge job growth, but as long as we don't see, the huge layoffs, we won't have a real hit to the economy. We'll be more in that status quo soft landing scenario, which is certainly what the Fed is watching for. Okay, so next up on Zelman's list would be watch for a big real estate reversal, but don't panic. There are no major surprises in Zelman's 2-year outlook for real estate. Considering many of her contemporaries are calling for higher home prices, she's calling for higher, but slightly higher, and more transactions as mortgage rate slide. She believes homeowners and buyers don't need to worry about a market meltdown. Okay, so not huge game-changing projections, but good to see that Zelman is positive on all fronts. A lower 30-year fixed, more transactions, more real estate sales, and prices that are going to go up modestly. Okay. Zelman is, though, keeping her eye on an overlooked dynamic in the housing market that may eventually cause a stir. The potential, this is going to sound crazy. I've mentioned it throughout last year on the hot sheet. The potential for a home supply glut following a long-term shortage. Okay, so she's worried that potentially builders could scramble here to play catch up. It seems like right now, when we say, we're 2.5 to 7 million homes short of meeting supply, that builders building 1 to 2 million homes a year for the foreseeable future would not be a problem, because every year you need about 1.5 million new homes just to make up for, supply growth, getting rid of old product and getting new product onto the market. But Zelman is worried that home builders may go overboard once again. They went overboard during that great financial crisis. Okay. Her hunch is home builders may go overboard once again, causing supply to outpace demand. That would lead to fewer home sales and downward pressure on prices. Why would supply outweigh demand long term? She's often talked about baby boomers getting rid of extra homes, but also just not needing the home at some point. We're talking 10, 15 years down the line, as they move into a more maybe assisted living or move on from planet Earth in whatever respect that may be, leaving a glut of single family homes that maybe don't meet the demand of the current population, which will certainly be less than what we have today for population. Population growth is decelerating. I'll show you a chart on that in just a second. First, on the completed spec inventory right now being at a near-term high. Okay, so this is what she's looking at. This is from Zelman Associates. We'll put all of our slides, downloads that we share here into BAMX for our BAMX members. Use code 2024 for 25% off of BAMX if you're not in right now. I think we're going to extend that through the week for the new year. So here's the completed spec inventory at near-term high. See completed and under construction on the right. Highest levels since 2004, 5, 6, 7, 8 levels, where builders did get way ahead of themselves during those speculative times. So I don't think this year us catching up is something to worry about. I think what Zelman is saying here is if we have a prolonged building spree over the next 5 years, that's where in 10 years you could feel the impacts of that. When builders in the industry and the National Association of Realtors and everybody talks that we have a housing shortage, the question that Zelman proposes is, what demand numbers are they using? Historically, 1.5 million units of demand would be needed, and therefore you need to build 1.5 million single-family homes to match the incremental households, okay? But the problem, according to Zelman, is that the 1.5 million households is the wrong number now. She's saying that number needs to be lower. We would dispute the shortage based on the household growth deceleration that's coming from the deceleration of population growth. The world's population is getting increasingly older as people live longer and birth rates decline. U.S. no exception. Advances in medicine, blah, 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 go on to keep people alive longer. In my layman terms there, 3 years ago, Zelman's firm projected that the U.S. population growth would slow to 4% after hitting 7.4%. So this is population growth. So population still growing, but slowing down to a number of 4%, a high, or hitting 7.4% in the 2010s. This is according to the nation's immigration, fertility, and death rates. The implications of that shift for the housing market are clear. Here's the chart from Zelman and Associates on population and household growth. If population is declining at this level, you see from the 50s to 60s, 60s to 70s, population growth was 18.5%, 13.3%. Then in the 70s, 11.5%. Population growth in the 80s, 9.8%. From 90s to 2000, 13.2%. Okay. Now we're down to 4% population growth. What she's saying is long term, as the population growth is decelerating, this household growth will also follow suit, just as it has the last 80 years, according to this chart. Household growth is going to decelerate, according to IvyZelman, which means long term. We're projecting out now, into the 2030s, for example, that we just won't need as many households. And so that $1.5 million number is lower than 1.5. Maybe it's 1 million. She doesn't really go on to say what exactly that number is, but her thesis is that it's too high currently. And so as you have baby boomers exiting the housing market in the future, there's going to be a population left holding the bag on single family homes that we just may not need. Another quote from Zelman is, if your population growth is getting cut in half over the next decade, your household growth is going to be negatively impacted. Older populations tend to move less frequently. We're listing a house. My team in Connecticut, we're listing a house tomorrow, or Friday rather, where it was too big of a house. It was definitely oversized for the aged couple that was living in the house. But they just, to Zelman's point, they just lived in it right up until the end, till they went into assisted living. They never downsized it. So they did move less frequently. They just never moved. They're like, we're going to stay here until our kids tell us we can't stay here anymore. Now the house is going on the market. And so from Zelman's perspective, when you see things like that, people staying in their homes longer because our population is older, it could result in a quieter housing market. We have a counter argument to that that's going to impact 2024. That's the major gift here coming up in just a second. With the slowing turnover and longer term demographic headwinds and mobility slowing, I think it's going to be fairly benign, boring type of environment. Zelman, another key component of Zelman's call, is an accelerating mortality rate. By the end of the decade, her firm projects that deaths will put 2.2 million homes on the market per year. Wow. I mean, if we had that this year, we'd be, solving the affordability and the inventory crisis. That often, we're not rooting for people to exit Earth. I'm just saying those numbers would be huge and massive. And she's saying that could be a per year number in the future. Often overlooked from supply increase, won't take down prices anytime soon, but could give homeowners a headache, especially if homes keep getting built. This is the aging population, which is a new challenge. This is projecting out in the blue to 2030. Estimated housing vacancies created by deaths in the thousands. Of course, those deaths 2021 and 22 higher than years prior to that, before dipping maybe to a more normal rate here in 2023. But she sees that stepping up each and every year as we look into the future. So her point is, hey, we might be getting inventory from an aging population. She doesn't think home prices are going to plummet because deaths are rising. The numbers aren't big enough for that to happen, but it's going to be a headwind and it's going to add up over time. Now, IvyZelman's prediction here for 2024 and that prediction long term has some common threads, but maybe some differences from the major gift that Meredith Whitney dropped on us. Meredith Whitney, like Steve Harney on the real estate analyst side, has also been called an oracle of the real estate market. Whitney says that a silver tsunami could have a bigger impact on the 2024 housing market. The silver tsunami. I don't know if I should say the word out of the article. I had to go through this art. I'm going to say it. A colloquism, I think is the word. I had to look this up, guys. If you don't know what colloquism is, it's a word or phrase that not formally or literally typically used in ordinary or familiar conversation. I would say so, not typically used in familiar conversation, but a colloquism is referring to aging Americans that are changing their housing arrangements to accommodate aging. Okay, so silver tsunami would be, I guess, the common speak, the word on the street referring to that. And it could have a more of an impact on the housing market this year, right now, something that agents and investors can take advantage of in this housing market. Okay, so here's the silver tsunami. There are 10,000 people a day turning 65 years of age. And that is going to continue until 2030. 10,000 people a day turning 65. And by 2030, the entire baby boomer population or generation will then be over 65. Why is 65 important? That's a retirement age. There are 10,000 people a day right now and throughout this entire year turning 65. People make new decisions at 65. We've seen over the last decade, we've seen a huge shift in where people live. And Meredith Whitney goes through this in an interview with Yahoo Finance, where she talks about people moving to Texas and Florida and Arizona and South Carolina. A lot of that has been accelerated by baby boomers turning that golden age of 65, getting that pension, getting that retirement, whatever it may be for them, having their 401k, and deciding to move south, deciding to move to some of these more retirement-friendly states. You've seen a huge shift in that. Obviously, COVID had an impact on that as well. But that's going to continue here. And that pace seems to be, pretty significant at 10,000 people a day, where people are just going to make a move. I need a house that's smaller, or I need a house in a new location, creating movement, creating flow, creating inventory in a market that hasn't seen such in the last 18 months. The growth will encompass 21% of the total U.S. population. And when combined with the outsized rate of home ownership among older Americans, the potential exists to dwarf the most active year the U.S. has seen for home sales. Okay, so the most active year for home sales was 2007. I'm sorry, 2005 at about 7 million transactions. She says that when you've got this much pent up demand for baby boomers to make a move, not here in 2024, but we could be leading up to a year where we completely dwarf 7 million transactions. That'd be double basically what we just experienced in 2023. And she sees an accelerant in this market of 2024. So she's more bullish on increased transactions than maybe anybody else we've heard from. And she's a very reputable analyst. This piece, again, there was an interview in Yahoo, and Housing Wire has also covered it. The AARP estimates that 50% of people over 50 have downsized their home. Okay, so you've got half of the people that are over 50 have already downsized their home. That means that half of the people have not yet downsized their home, have not yet made a real estate transaction move decision to support their lifestyle moving forward. So people that are over 50 right now are 74% of total U.S. homeowners. We have an older population. And again, that goes back to IvyZelman saying we're going to have long-term implications on an older population. Maybe they figure out immigration. It's a place people want to be, is America. Maybe that changes. We get a immigration plan that works. Obviously, that'll be debated leading up to November quite a bit. But the facts are right now we have an aging population, and we don't have as many folks bringing families into America. So this is going to be a problem that persists certainly over the next 10 years. You've seen this in other countries. So 74% of total U.S. homeowners happen to be over 50. So if you take half of that, you have about 30 million homes that should be coming on the market, according to Whitney. 30 million homes coming onto the market. Now, if they're, we're talking about just people over 50, I would say that that's going to be a spread of maybe 10 years. So just these 30 million homes over 10 million, that's 3 million homes a year. Okay, that supports a little bit of what Zelman said with the 2.2 million homes. So we're talking about, and just from this one category, right? Not even from move up buyers and millennials and Gen Z potentially coming into the market over the next 5 to 10 years. The peak again of existing home sales was 2025 when you had around 7 million transactions. So she sees light at the end of the tunnel. It's the biggest gift for real estate agents and investors and brokers could have right now is a real reputable analyst saying, hey, we've got a real boost coming to transactions in our future. She referred to this trend as a python that could begin coming to fruition in the later half of 2024 and then could persist for the next several years. So she's not in line with most projections that say we're going to have a slow crawl for increased transactions. She actually sees a persistence in an increase in transactions starting at the end of the year. Let's hear from directly from Meredith Whitney in her interview with Yahoo. We have it time-stamped exactly where we want to start. Let's share that, Haley.
Opportunity. And then the other major demographic trend you see is the aging of America. So what's called the silver tsunami is 10,000 people a day turning 65. And by 2030, the entire baby boomer population or generation will be over 65. So that'll be 21% of the U.S. population. So there'll be more people over 65 than under 18, and that creates that will create a different environment, and will be lasting several years. So the AARP estimates that 51% of people over 50 downsized their home, and people over 50 are 74% of total U.S. homeowners. So if you just take half of that, you've got about 30 million homes that should be coming on the market. And the peak in existing home sales was 2005 when you had around 7 million transactions. So you've got a big sort of pig through the python that will start, I think, later part of 24 and go on for the next several years. So that I think is what's going to be reshaping housing in America. And I think that's what will put regional pressure in terms of more and less on home prices.
The regional pressure that
silver tsunami that you're talking.
You can go off of that, Haley. The regional pressure that she speaks to, I see as a problem coming when it relates to too much inventory. I certainly see 10 to 15 years out in a place like South or all of Florida, really not specifically South Florida, having a glut of this inventory, which could have a pressure in those time periods, 10, 15 years of prices down, big retirement communities, think certain local communities in the South Carolina where you've had a lot where if you have a glut of a baby boomer growth here, that's where you could see some of these places with higher levels of inventory as opposed to other parts of the country. But I think right now in where we are with affordability, where we are in inventory, any reasonable person interested in U.S. housing would welcome this flow, this influx of inventory. Let me know in the comments what you think versus what you think here for 2024 in terms of an increase in transactions. Do you agree with Meredith Whitney? I'm certainly rooting for that bullish projection to be true, and it supports what IvyZelman has said for years. So I'm definitely leaning long term that way. End of 2024, where it starts to accelerate, remains to be seen. I certainly would love to see that. Mortgage demand final 2 weeks. Update on that was down 9.4% in the final week of 2023, despite the recent rate in drops. Applications to purchase a home ended the year 12% lower. This is expected during that holiday week where you're probably not going to see much activity. I'm more interested in what happens this week, which we'll report on next week coming out of the gates. We saw signs November, December of mortgage applications increasing. So there's your update on applications. I've got, for the gift I just gave you on the silver tsunami, I do have a little bit of troubling news. The 10-year did break 4% today. It's back down to 3.985, but it's up off of yesterday. Yesterday, when I mentioned, hey, the 10-year is ticking up to start the year, that did result in a 30-year fixed rate popping up a little bit off of that 6.6 level. We were in the 6.6s seemingly for 2.5, 3 weeks strong. Yesterday on Mortgage News Daily, we ended the day at 6.72. So there's still going to be some bumps in the road. We're not on a, we're not in Park City on a black diamond where everything is straight down as it relates to the 30-year fixed. We're on one of those little training hills where, the little kids kind of like go up and then they go down, up and down. There's going to be some up and down here on the rates. 10-year going up is interesting. We explained that yesterday, what that could mean. Now, one thing that can reduce the 30-year fix without the 10-year really coming down is the relationship normalizing. We'd be under 6%. If we had a normal relationship today, and hopefully that spread will start to reduce. But CNBC has breaking news that 10-year Treasury has risen back above 4% as a downtrend to end 2023 is now reversing. It's a 2-day trend. Here to start the day on this Wednesday, the Dow, S&P, and NASDAQ following suit with yesterday, where the markets are all down. So for all the great momentum we had to end of the year, a little bit of cautiousness. We'll see what happens with jobs later this week. We'll also see what happens as we look for more inflation data coming, and potentially when those interest rates or those interest rates from the Fed will start to hit. If you haven't already, you want to get the most out of what we do here at BAM and the most of what we do with the hot sheet, including access to our show notes each and every single day. Get into our BAMX community. Use code 2024 right now for 25% off of BAMX. This is the New Year sale extended until further notice here. I don't know if it's through the week or when it's going to be, but it's definitely happening right now. So don't wait. Use 2024 to get 25% off of your annual subscription on BAMX. Get access to all of our show notes each and every single day that you can use for your marketing, for your communications with your database, as well as the daily downloads each and every single day. Our Facebook community, it's ending January 7th. Okay, so a few more days left on that. You also get access to all of our courses and our live streams inside of BAMX. Get the most out of BAM by joining BAMX 2024 for 25% off. If you're trying to figure out how you're going to deal with all of these new transactions this year, I would encourage you to have an operating system that allows you to do that. Mosaic is the operating system for the agents of today. Mosaic.io. We have the link below, is where you should be looking for your operating system. Every superhero needs a sidekick, and Mosaic is the digital sidekick for real estate agents. It is a operating platform that you can do everything on. Keep in front of your past clients, your repeat and referral business, helps you close deals, helps you accumulate and collect your offers. Go to mosaic.io. I have a link down below to check out Mosaic. Thank you for joining this hot sheet. Share it with somebody who wants a gift like the silver tsunami. We'll be back here tomorrow to talk more on a 24-hour look back on housing. Until then, toodaloo.